Hey guys, Youthful Yields here. Apologies, I just kind of got off work not too long ago. Took a short nap, so I'm here doing the new group. So we can see here that the this is group C. So yep, basically we have oh well yeah, let's just get straight into it. So basically we don't have a distribution rate from Chippy yet, but we will receive that obviously here soon. Sorry. But basically we have a 3-month average of 35 cents, and you can see the price trend here. It's actually trending upwards, as well as the distribution trend is also trending upwards. This is pretty nice. GPTY, we have a 38% distribution, annualized distribution rate, but yeah, I guess, sorry, I'll just kind of try to focus on the distribution per share. So we have a 28 or 20 what's it called? A 29% or 29 cent distribution per share with a 3-month average of 28. So we're about the same. You can see how the price has kind of fallen down. Unfortunately, the distribution's around the same, but a little bit down here. So LGY 47 cents with a 3-month average of 50. So it's actually above that's below the 3-month average. Same story here. They follow pretty much identical trends. We can see QDTY with a current distribution of 34 cents, 3-month average of 27 cents. So you can see, despite the price going down, the distribution trend is actually up. RDTY, we have 47% distribution with a 3-month average of 36 cents. Same story is true, similar to QDTY. STTY, 31 cents, a 3-month average of 24 cents. Same story there. Ulti, we have a 9-cent distribution with a 3-month average of 28 cents. So this is completely flatlined, as you can see. Fortunately, who could have seen that coming? Yeah, Ulti's been on, it's been a dying fund for a while, so I'm not surprised by any means. YMAG, we have a 10-cent distribution with a 12-cent 3-month average. So unfortunately, not doing too hot there. With YMAX actually beating its 3-month average of 17 cents, so over 15. So I'm happy about that. Moving into the monthly funds, ABNY, we have a 60-cent distribution with a 3-month average of 42 cents. So that's actually on the rise. We have AMDY with a 34-cent distribution with a 3-month average of 30 cents. Same thing there is true. We have Coney, 65-cent average or distribution and a 69% average or 69-cent average. Sorry, so used to saying percents. CVNY, we have a $2.68 distribution with a $3.44 3-month average. Now I believe this is only two or three distributions together, so take that with how you want it. Fiat, we have 56 cents with a 3-month average of 72 cents. You can see how that reacted. With this being an inverse fund, you can see that actually all of these funds kind of have the same trend, and that's just how the market kind of went. You can see that this is around the time with Trump tariff. And that one kind of does the opposite. You can see it very well right next to this. So that's because this is an inverse fund. MSFO, we have 53 cents and a 33% or 33-cent 3-month average. You can see that as well, and that's on the rise a lot faster than the others, as well as NFLY, which is Netflix, right? 92 cents at the 3-month average of 69 cents. You can see that's almost back up to green. There's only one fund here that's actually trending upwards in terms of share price, and that is Chippy. But that's also, I think, one of the newest, if not the newest. So you can see it has less data points as well. Last but not least, PyPy, POI, 55-cent distribution, and a 3-month average of 47 cents. So, all in all, the market seems to be rebounding a little bit. There was recent news today regarding the U.S. GDP being, the growth being negative for the first time since, I think, Q1 of 2022. So people think this is like a clear sign of recession. Obviously, there's been a lot of talk of recession in the last little bit. So there's that, as well as there's been some earnings, and there's more earnings this week. One of the larger earnings being, I think, Microsoft. You can see up after hours 6.9%, and I think Apple's tomorrow. Let's see. Oops, earnings calendar somewhere here. I like this earnings whisper. We can see here. That's weird. We can see here today was Meta. Sorry, that was the other one, not Apple. Apple, I think, is tomorrow. So we can come over to, I think they have it. Yeah, May 1st. So this is before open. We actually want after close, I believe. Apple and Amazon are tomorrow. So we'll see how that goes. We'll see Meta stock right here up 5.36%. So obviously that's very well. Yeah, I mean, that is kind of it for me. You can see that we've had a lot of these beat the estimates, which is good. The only estimate that was not beat, so to speak, was that US GDP that I was talking about earlier. You can see here that this graph kind of displays that. So the that's exceptionally small. You can see here that we're down 0.3%. Now, a lot of people are saying this isn't a clear sign of recession because obviously you need to account for stuff like unemployment as well. That will really tell us the story. Also, here's the graph, I think, with here's the graph with 2022 in the picture as well, and 2020 as well as 2009, right? So it's, rarer, but also you can see that every single time that we go down quite a bit in GDP, this is the same true for the market. We typically have a large kickback, right? So you would say the average is probably around here, and this went down a little bit and then shot back up. Also, this is extremely small in the course of these drops, right? So this is 0.3, where these other ones have been, like in 2020, is 5%. So, and this one was 1% in 2022. But it's really interesting to look at this. If anything, again, as I've been saying the last few months, this is a good buying opportunity. I'm not just saying that because I'm some guru, if you want to call me that, or whatever. Trying to sell you some course. What it really comes down to is DCA, right? I'm not saying buy the dip. I actually am really against that idea. I am saying if you have the money to set aside and invest, you might as well invest how you have been. Just because the markets are going down doesn't mean you should stop investing. That's like the main thing I'm trying to drive home in these videos, is basically just keep investing consistently every month, every week, every day, whatever you do, every quarter. Yes, the market is going down. It has been for since the beginning of the year. Let's look up SPY stock, for example. 5% down, right? Since the beginning of the year. We're actually back up, which is good since the last year, but even then, we're still up 10% in a year, so that's not bad at all, right? That's about average for the market. But my point is, Does not matter the market conditions. As long as you consistently give the market your money, it's going to pay you back, right? Now, obviously, I think I stated this my last portfolio video. If you are trying to retire right now, or like, you know, within the next year, that is where this kind of becomes a problem. But at the same time, guys, you should probably, if you're at that stage in your life, you probably shouldn't be investing in super risky stocks in the first place, such as these YieldMax distributions or these YieldMax. I was reading the title. These YieldMax funds, right? These are very risky, high volatility funds, and you should probably be investing in stuff like, you know, bonds. Really, that should be your main thing. But I don't want to tell you guys obviously what you should have. That's my suggestion. I'm not a financial advisor or anything, but at the end of the day, just consistently add if you have time to add, and you know it's gonna come. It always comes back, right? Like we can look in the last 5 years, it's always come back. So I mean, not the last 5 years. It's always come back, right? In the span of, or if we're talking about U.S. markets, right? You can see, unfortunately, like here, we hit a peak in 2021 and 458, and it took about, you know, when was that? November? It took about a year and a half. But realistically, a year and a half, that's not even that much. Like, come on, guys. So, anyways, that is it for me. And as always, I wish you guys a wealthy future.